Hey everybody, Kimo Sabi here yet again, giving another update. We got the move up that I was looking for, so happy days. This does not mean that the bottom is in. You don't have an uptrend yet. The daily candle has to close up there, and then you have an argument for a potential uptrend. So if you get a daily candle close higher than that high, then you have an argument to buy the higher low at liquidity maybe 50% down of this candle here on the daily, putting you at like 88, maybe 89,000 for a potential buy setup if you can find it. But this is certainly matching the leg that I was looking for, matching this leg up there. I'll just turn that white to make it a little more visible. We'll clone one, and we'll bring it up there. So those are technically matching in kind of overall direction and shape and length thus far. That doesn't mean short immediately, though you did just grab liquidity. So if this pushes down a little bit and hovers here for a little while and then breaks above that high, you're targeting next liquidity at 96. We'll look at that on smaller time frames after we get done with a daily chart here, though. So we'll take some measurements and see where are we going. I want to initially measure the first leg of that sequence being this leg and matching it with this leg. On a closing basis, it looks identical. So let's take a trend-based fib extension on a closing price to closing price, and we'll match it closing price to closing price over here. And you can see that it made it almost to the 1272 on a closing basis. The wick made it up to the 1.618. So that's in the realm of matching. It's right there. If it would have closed beyond the 1.618, then that leg would have no longer been matching for me. And the leg that came after was this leg down. Had a nice sharp move down. Those do match. This one looks a little bit longer. I think it made it to the 1272. All good. And then the next leg in the sequence, I mean, on a closing basis, I think you've already surpassed that. On a closing basis, you're already beyond the 1.618. So a daily candle close beyond that makes it so that leg doesn't really match on a daily, probably matches more on a 4-hour. But let's measure wick to wick to say where's our range to say those match. Okay, we are in the pocket between the 1272 and the 100 fib extension. Draw a little box there to say this is where the pocket is. It's the rejection zone. But if price moves up to the 1.618, that leg is no longer matching and it's doing something different. And I can easily see price getting up there. It can definitely come up there, grab that liquidity, and backtest this previous support as resistance here at 98.7. But seeing as you just took liquidity, you took the previous high and you took this local liquidity here, the next bout of liquidity is up at 96.5. So that would be the next area to look for. So seeing as price has moved down, and I was contemplating that this being a distribution into a reaccumulation down here, we can draw off a redistribution box here and then clone it. And maybe we're repeating the same thing down here. Now let's draw this out. So if you have this leg up here doing that, this leg here doing that, making it to the 1272 potentially, it might look a little bit bigger, but as long as it doesn't go to the 1618, it still matches. It's still valid for me. So if price is to go down here and you kind of have a 4-hour uptrend If this leg repeats, this would have essentially come down here and close a daily candle lower low, giving you a sell setup on the lower high to target the extension of that leg to the downside. So then you'll have, if price does want to go down, you'll have trend on your side. And essentially the trend here is doing that. So here's your lower low, lower high, lower low. Your lower high should come in right around there. And then look for the continuation of the trend. And locally, if price does close up here, close a higher high, then in order to turn the trend down, it has to close a lower low. Then you get a lower high. Then you get the push down. And you'd be essentially just repeating that leg. And that's basically what it would look like. So looking at trend, measuring trend, the way to think about trend is if you do get a higher high, you do have an argument to buy the higher. But if this price breaks down and closes a lower low, then you have the argument to say lower high and expect liquidity to the downside. But I just wanted to draw those boxes on there to show potential market symmetry going on here with those legs being symmetrical and having a symmetrical move down, ABC in the middle. Everything flows really nicely. And let's get a target. If price is to move down, where do we look for it? To complete. Well, if the high is already in right now, you can measure that and expect the same leg to repeat to the downside. Currently I'd target 77 to 72. Around that area, that would be where you would look for a bottoming process. And if price decides to push up for next liquidity, you'd be looking at getting up there to grab that liquidity. That would raise the matching leg to come down. You'd be looking at 79 down to 75. So if that is the case, then maybe you don't take out that previous low. You just come down to it real close. And then these previous supports end up being support again. Anything's possible. Anything's in the realm of possibility here. So what we're definitely looking for is a change in behavior, change in trend, and continuation. So right up here, you did have a change in trend. You had a high, low, higher high. That was higher than that high. And then price came and closed a lower low, which continued the downtrend. You had an argument here to buy the higher low right there. And it didn't get very far. So then that stopped you out. Then you had a sell setup because you had a lower low close, lower high, and it goes down. So similar thinking over here is price would essentially do the same thing. You have an argument for a higher low around 88,000, 89,000 if this daily closes up here. And if that gets stopped out, you close a lower low, look for the lower high, and push down. I hope that makes sense. I hope that explaining it in that manner helps to kind of look at things in the realm of trend and closing prices. You can have all different types of methods of entry into a trade via Elliott Wave, Wyckoff, TD Sequential, Ichimoku Cloud. There's so many different ways to enter a market with those trading systems, but they do have validation. What I try to emphasize here is make sure that your trend is aligning with the direction you're trading in. If you're getting stopped out frequently, you're probably trading in the wrong direction. In my experience, that's what I've noticed. So if you're trading in the direction of the trend, you get stopped out less often. Zooming down to the 4-hour chart, this has the potential to be a completed move. I can see the completion there just at a glance. Let me show you what I'm looking at. So you've got this consolidation right there, matching that consolidation right there, and the extra leg, some kind of ABC in the middle. But that looks like a completed move. Does that mean it's totally complete? No. Do you have any reason to short it? Not in a 4 hour time frame. 4 hours is actually giving you potential higher high here. Your higher low would come in around here. So that could be potential for a buy setup. If, however, this closes here, pops back up, that gives you a sell at least until down here, maybe backtest these highs. Looking at this structure here, this doesn't look complete. It looks like it should go up a little higher, but it certainly doesn't have to. But if it wants to, there's an Elliott wave trade setup that I can see on here. Clear invalidation for another push up. If you want to trade that long, in order to see it, you got to go down to the 1 hour chart. You measure this leg for a potential wave 1, wave 2, wave 3, 4, 5. So what I'm seeing is a potential for this to just keep moving up. So I have the measurement here. Now let's put a little wave count on top of it. This potentially 1, 2. This looks like it would be a 3, but all of this can be 3. If so, you expect wave 4 to come back to wave 4 of lesser degree, and then a push up into that upper liquidity. And that's how you would get to your 97, 96 liquidity looking left. It would be something like that. That's the way it would look. You'd be coming back down just below your daily open there, that blue line. And we would have a Fibonacci retracement from wave 2, the wave 2 low, to the wave 3 high. And you'd look for a 50% retrace down to 90,000, which would be that wick right there. We're on a 1 hour chart, so this is the 11 a.m. wick, would be the potential area to look for a buy setup. That would give you all of this lower liquidity, look for a bounce, and then put your stop loss at the low after that bounce. If you break below that, you're likely coming after this lower liquidity. If you happen to spot it in real time, potentially at New York Open, or maybe it's 7:30 New York time before the New York Open, if you happen to catch it here and price comes down to that area, look for like a 15-minute higher high coming out of there to give yourself the start of a 15-minute uptrend, and then put your stop loss at the low, and you target the highs and see how far it'll go. And then who knows, maybe it gets up to that 100K area that I kind of wanted to say that would look like a change in behavior from yesterday's video. You would get a change in behavior to say, hey, maybe this is more bullish than expected. I definitely watch for this pattern to be totally complete. This may be the ultimate sell, and you're coming all the way down. How do you denote that? At a 1 hour, you would have a sell setup. If this closes a 1 hour down at 90,000, then you would sell the lower high. Stop loss goes at the high. Also a valid sell setup. So play the trend, play the direction of the trend on the time frame you're trading, and good luck. Now let's look at some XRP. People wanted to see what I was thinking on XRP. All right, first things first on XRP, I want to take a look at the weekly chart. Zooming out just to let you know where you're at in the trend and what this looks like. When you have a higher high, there's a lower low followed by a higher high. So now you have a higher high to deal with, and your low is down here. You will notice this is still a higher low than all of these previous lows. This is still in a weekly uptrend. That'll change if the weekly closes down, 160 or something like that, which it certainly can. So if it trades down there and closes down at 160, then maybe you have a lower low. Look for the lower high at liquidity, which your liquidity would be probably at the previous support, would be a resistance again. But you have liquidity up here at the $3.20 range, all the way up to $3.30. Those are just little liquidity pockets that I think are likely to get hit. But weekly is in an uptrend. It's still in an uptrend. Um, Even though you had a very large flush down, you didn't close down there. Even this push down did not close low. Let's zoom into the daily. Daily, I have marked off here with the white line. That is the supply line. Well, it was the demand line, now turned supply line. And I have this red line that was marked previous supports. So that's where price has supported in the past. Flush down below it, popped up to your supply line, well, your previous demand line. SR flip, support resistance flip there, pushes back down. Where else is it going to go? Previous supports. So this is a potential low on XRP that will be maintained. I think you got to overcome this bearish pattern here, which could be the ABC here, and this is about to roll down and take the low again to match that leg. But it has a potential here to be a low. All you need is a higher high. Daily higher high, that gives you a daily potential uptrend. While the weekly is in an uptrend, then you need the 4 hour to be in an uptrend and 1 hour, and then you'd be ready to rip, I think. Now, let's draw out the pattern that I'm seeing right off the bat. You can see that three-way very, very easily. And then branching off from that, you've got this ABC down, similar to this ABC down. So there's your ABC. And off of this low, you have a move up that can match that. Consolidation there matches that consolidation. What comes next is potentially a very, very large move to the upside. You've been consolidating here for roughly a year, and it held. I mean, this is actually showing relative strength. It's held this $2 to $3 zone for a year now. So that's a decent time, a decent amount of time to allow anybody that wants to exit. So make price look really bearish. So people just think this is dead cat bounce and then come back down and just melt faces. That's not what I find extremely interesting. I find it interesting the matching of the patterns in the legs and also the timing. So if I was to match this leg, well, let's just match this leg down. Take it from the high. You reach the 1272. This is in log scale, but 1272. Well, that looks good. Next leg in the sequence. This leg up right here. Measure that from the low, the wick low. Makes it to the 1272. Looks legit. And the following leg in the sequence is this move down. That matches. Actually, that one did not reach target yet, which means you could have another stab down here to $1.73, and that would fit with Bitcoin coming down to $1.73, or coming down for one more low just to take it again. And then your ABC pattern be something like this. Your B would be up here maybe, and then come down to that target. So that's something that I'm watching. If this pops up again to resistance and then flushes down, that is an area that I'm looking at as 173, which also gives you these lows over here. See, that's the ultimate low from that flush down. And I'll back test that and see if that's going to be support. And then perhaps you get a bounce up and the current area 180 then shows itself to be support, and maybe you slowly make some kind of leading diagonal up out of here. But I have an argument to say maybe the low is in. Coming back to this little three-wave move that moved to the highs, Mark it off one more time for you. This one right in the center. ABC. So if I take that ABC and get this up and take our trusty trend-based fib time, I'm going to take a starting point anywhere, it doesn't really matter, but my second point I want at that wick low, and the next point I want at the high, and then we could do that mirror technique with that previous all-time high, the all-time high break, matches up with the current low, that wick flash crash low. Maybe move this over a few ticks to that second wick. And if we take that to be a mirror, our high comes in at this high. Next low comes in close to that low, comes in close to, and then ultimately the final high up there matches with the current low. So from a timing perspective, this is very symmetrical, to say the low may be in on XRP. But again, you need a higher high close. So give me a higher high by the higher low, and the target for this is pretty substantial. If you take a trend-based fib extension, just measuring how far the trend is going to go, could potentially go. Actually, I'd have to measure it from that starting point to our current low. If the timing works out, you have a 1-to-1 Fibonacci extension of $11. So that, which is from there, for a ride up, before pausing and consolidating, potentially going a little farther. The extension potentially reach 14 to 15 bucks. And that's just matching the patterns. And if the pattern moves up in a similar manner that it did last year, then it should go pretty quick. It'll maybe catch you off guard, and it might just be one of those rallies. It might act very similar to that, potentially in reverse. Well, we'll see what the timing says. Timing gives you all the way over here, which would be April time frame to reach 15 bucks, maybe. You may actually have a substantial rally that happens even faster than that, and the consolidation or distribution pattern ends up being up here for a couple months before an upthrust. Something that I'm looking at. So if this thing does start moving up, watch for it to repeat what it did last year. Just watch the same thing to go up. Because on these down moves, we've had very similar legs down. We've had a pop back up, a retrace back down that's very similar. So why not extend that same rally? Something to watch for. And yeah, overall, this is not a bad looking chart. And there's an argument to say that the low is in for XRP, which says that there's an argument that the low is in for Bitcoin. Locally here on XRP, like I was saying, this is still a downtrend, and you may look to $1.73 for that wick to be tagged to match that leg perfectly. You may go up first, though. You may go up and then come back down to $1.73. It may just rally up, take liquidity, and then it's time to go. So watch for an uptrend to start. Watch for an uptrend to start. And then trade it up. But overall, not a bad looking chart. I mean, this is holding pretty well here in this range for a whole year. So act accordingly. Well, and that's about it for today. Pretty long video now. Yeah. Have a good night. Keep them stops tight.